So welcome to our we are still in topic 4. So we are still in topic 4. So financial accounting. So we are still in topic 4. Baada tujamaliza topic 4, I think we shall complete this topic 4 next week. So we are still in topic 4. I think we shall manage this topic next week. So let us continue with the topic 4. Let us continue with the topic 4. So still topic 4, as I was saying. And yes, so topic 4. So the other day, what were we doing the other day? I think we were doing the accounts for bad debts, if I'm not wrong. We are doing the accounts for bad debts, and I give you a question to do it. No one did it. I think no one did it because I mean to be any of those questions. Hata kuuliza swali, no one has asked any question. Anyway, I assume that mko sawa. So if so we are still in topic 4. Remember in topic 4, we are supposed to talk about the control accounts, depreciation. That is topic 4. We also are supposed to talk about the bad debts and debtors. So we are supposed to talk about prepaid and accruals, prepayments and accruals for both expense and income. We are supposed to talk about prepayments and accruals for both expense and income. And also we are supposed to talk about the bank reconciliation. Bank reconciliation statement. So this is topic 4. This is topic 4. I think for now we have covered. But the only thing we have covered so far in topic 4, we have covered depreciation, we have covered bad debts. What else have we covered? Mbili tu. All those time tumekuwa tukikutana, so tumecover tu vitu mbili. We are too far behind. So let us start doing with control accounts. Then these two we shall do it on Monday, God willing. So we try and see if we can finish the control accounts. So control, let's start with the control accounts. Controls account. So that's where we shall start. So control accounts, that's our that's our focus today. The controllers account, and we say when we talk about the control accounts, now when we talk about control accounts is just a summary of all the individual ledgers. So when we talk about when we want to have a summary, so when we want to have the summary of all the individual ledgers, summary of all the individual ledgers or the personal ledgers, then what we need to think is the control accounts. So the control accounts is just a summary of all the individual accounts brought together. So when we bring all the individual accounts together, their balances. So when we bring their balances together, it will form what we call the control accounts. It will form what we call the control accounts. So when we talk about the control accounts, remember, control accounts represent the summary of all the individual or the personal ledger. So we can say this account represent summary. This account represents summary of all the individual accounts or the individual ledgers. Let's use the word ledgers. Or we could call it the personal ledgers or the personal ledgers or the personal ledgers. So when we say that it is a summary of all the individual ledgers, or the personal ledgers, then that is what we mean by the term control account. And then you can say this account which is basically used. It is account which is basically used. Now this account is basically used to do what? To check the accuracy of the posting in the ledger. So this account is used to check the accuracy of postings in the ledger. So when we open our T accounts, so all our T accounts, so all our T accounts can only be authenticated using the control account. So it can only be authenticated using the control account. Now, before we go to the type of the control account, let's talk. When we talk about the personal ledger, the personal ledger consists of the following items. Personal ledger consists of the following item. Niweke hivyo. Consists of the following item. So we have the sales ledger. And then we have the purchases ledger. Then in our sales ledger, we have our debtors control account. So debtors, so when we give people on credit, so when we sell our goods on credit, so assume we are selling on credit, or some part of our sales is on credit, then we shall it will lead to what we call the debtors control account. Control accounts. Now, when we purchase items on credit, then it will lead to the what we call debtors, the creditors account, creditors control account, creditors control accounts. Now with that one, now you can see we have two types of control account. So we have two types of control account. We have the debtors account, the debtors control account, and we have the creditors control account. So with that information, you can see we have two types of controls from our personal ledger. So we have the debtors control account or the creditors control account. So that's where we go. We are heading. So type of controls. Type of controls. Accounts. So tuko na mbili. Remember, they represent balances. So remember, when we talk about control account, they represent the balances from the personal ledgers. So when you take the balances for personal ledger, it's what we perform the control accounts. So number one, we have the sales ledger control account, or you can call it the debtors control account, or you can call it debtors control account. Number two, we have the purchases ledger control account, or what we call the creditors control account. Control account. Sometimes you can call it, this one you can call it the receivables. Receivables control account, or this one you can call it payables. Payables control account. So you can also call them those names, but I would prefer we go with the first two unless otherwise. So I prefer we go with the first, this one. So sales ledger control account or purchase ledger control account, but you can also call them the other names as you can see. So let us start with the first one. Let us start with, now before we talk about what is this sales ledger control account and what is this purchase ledger, we can say that control accounts operate on the principles of opening balances. So control accounts yes. Sikusikia, tunasemaje? Do you have a question? Kuna nimesikia mtu akiongea. Is there anyone with a question? Kunayo? Okay. So tunasema control accounts operate on the principles of opening balances. So control accounts operate on the principle of its opening balance. On principles of its opening balances. So the control accounts operate on the principle of its opening balances of an account. So control accounts operate on the principle, control accounts operate on a principle that control accounts operate on a principle that if the opening balance of an account is known, that if the opening balance of account is known, comma, so the control accounts operate on a principle that if the opening balance account is known, addition and deduction are known. Addition and deduction are known. Addition and deduction are known. Then the closing balance can be calculated. Then the closing balance can be calculated. The closing balance can be calculated as balancing figure. So when we know what we are supposed to add and what we are supposed to deduct, and you have our opening balance. So for example, you have prepared the sales ledger account. So we know the balance brought down, for example, and we know what we are supposed to add and we know what we are supposed to deduct. Then with that information, we can easily calculate the balance carried down as our balancing figure, the balance carried down as our balancing figure.
Why is it that the board is not clear from my side?
So your board is on your side. Ni nani huyo mwenye
It's
anasema
not
board sio clear?
Mimi, Mikali.
Mwikali. What
Yeah.
about the others? Wengine mnasemaje?
It's clear. It's clear. Maybe atoke rejoin.
Ebu, you can exit and then you rejoin. Try to exit
Okay.
and then rejoin. Tafadhali.
Okay.
And you clear your background. Clear everything in your background. Yeah, and so as I was saying, if we have the opening balances and we know what we are supposed to add and what we are supposed to deduct, then it is easier for us to calculate the balance at the end. That's what we mean. So we can say that put it in another way. So when you put this information another way, it means when we have the opening balances of the control account, when you have the opening balance of the control account, and then we know some of item affecting both the credit and the debit side. So if we have the opening balance and we know the item which affects the debit side and the credit side of this account, then it is possible for us to calculate the closing balance, which is the missing value. It is possible for us. So it will be possible for us to compute the missing balance, which is the closing balance. So tunasema when we have the opening balance and we know all the information which affects the debit side and which affects the credit side, then we can clearly say that it is possible for us to get the closing balance. I think that one is well explained. That one is well explained. So let's talk about the sales ledger control account. That's number one. Sales ledger control account. So it is also called the debtors control account. So it is also called the debtors control account. Other people can call it the receivables control account. So, but the common name is the sales ledger control account. So sales ledger control account. So this is similar. So this account is similar. So in case you have an issue, tafadhali don't text. Don't text, but you talk. So this account is similar to an account of an individual debtor. So this account is similar to an account. So this account similar to an account of individual debtors of individual debtors. Nasema debtors. So this account is similar to an account of individual debtors. I think that one is okay. Only that the item that the item only that the item that would reflect only the item that will be reflected that will be reflected only the amount that will be reflected in the account will be for all the data in the account will be for all the data will be for all the data will be for all the data and the transaction affecting the data in a particular period and the transactions affecting the data in a specific period. Now, this account, as you have said, this account is similar to what we call the individual data. The individual data account. Now remember, the individual data account, it records all the transactions relating to the data. Same to the sales ledger control account. The sales ledger control account will record all the items that affects the data's balances. Now, we have some item which does not affect the sales ledger control account. For example, the cash sales. Now, for example, cash sales. Now, cash sales, this item does not affect the sales ledger control account. So when you are doing this question, when it become a cash sales, what use goods on cash. So when they receive cash, they will never work is cash on credit. Now, if they give on credit, it means that any cash on credit, or if they do any sales on credit, so any sales on credit will affect this account. But when a company do cash sales, now cash sales ni kumaanisha kuna deni hapo, wamepeana goods na waka receive pesa, so hapo tumemalizana nao kabisa. Now this kind of an item will not affect this account. So sometimes intentionally, when they are in an exam, they will give you all the information na pia kuweka cash sales, for example, in your information. Now ukiona the word cash sales, ujue the cash sales will not affect. So tunasema this account is similar to an account of an individual data only, and that the item that would be reflected in this account will be for all the data only. Any account that's any transaction which does not affect the data will not be included in this account. Now remember, the transaction that we're talking about which affect the data, those transactions is they can either increase the data or reduce the data. So when you do this question, you need to determine which items will increase our data and which items will reduce our data and which items will not affect our debt. Now, the item that will not affect our debt, for example, the cashes will not be recorded in this account, but those will affect either by increasing the balances or reducing the balances will be reflected in this account. That one is correct. I think you have to sawa kabisa. So we talk about the sales ledger account. These are account which is similar to the individual debtors account and which records or which reflects all the accounts of the debtors and any transaction affecting the debtors for specific period. Format. The format nivute juu. Let me do away with the upper part so that we can have the format of the sales ledger control account. Sales ledger control account. Sales ledger control account. Let us have the format. So the format in Inaweka, it might have all the items you need in an exam. Some will add them while we shall be doing questions. So for now, So sales ledger control account. Sales ledger control account. So we want to draw the format that we shall be using in an exam. Let us draw the format. So the first item that we need to start with is the balance brought down. Balance brought down. Into bracket, we call it the debit side. The debit side, I'm a debit balance. Let us call it debit balance. Debit balance. But we can also have a balance brought down on the other side. Balance brought down, credit balance. So we can also have the two balance in a question. So ukipatana swali mbili, moja ni credit balance, moja ni debit balance, then ujue moja ikusaidie, moja ikusaidie. Now mbona tuko na tunaweza swali, why do we are supposed to have this balance? So the balance for the sales ledger control account, we are supposed to have the balance put down in the debit side as this figure. Now, but the question is, why are we having another balance put down on a credit balance on the other side, on the credit side? Now, this is the reason. This is the reason why you might have two balances in this account. Now, this balance is the balance from the previous period. That one is well explained. So balance from the previous period, you're here. Now, but in the case where we have an over, so remember this is, we're talking about sales ledger control account, we're talking about a debt. We're talking about a debt. Now, assume we were paid. There was an overpayment. Now, the debtor paid us more than our debt. So the debtors are to repay more than what we expected. Now, the excess that we have been paid is the credit balance. It will be offsetted. It will be offsetted in the next coming year or in the next period. And therefore, when the debtor ametulipa more than yenye anafaa kulipa, then the overpayment will be reflected as the credit balance. So that will be the overpayment. So that's why we are having it on the other side. Now, let us see the accounts which affect this account. One of the account is the credit sales. One of the account is the credit sales. Credit sales. Now, credit sales tunaiweka side because it increases the balance. So remember the balance, ikiwa side inamaanisha ina increase. Is that all correct? And then ukipeleka side D, when you put an item on the credit side, kumaanisha ina reduce the balance. When ukiweka amount side ni kumaanisha ina increase the balance. So tukianza na hii balance, sasa tumeanza na balance ya 20 shillings. Then tumeanza na deni. So the balance from our data ni 20. Then tuka-issue another credit sales. Tukauza on credit ya another 20. So deni hiyo itakuwa ngapi? 20 plus 20. So so our deni inaongezeka. So deni yenye tunaoa watu inaongezeka. Now assume hiyo jamaa ametulipa overpayment. Now overpayment is supposed to reduce the balance. That's why tunaweka on the credit side. So when you have the balance go down, but it's a credit balance, it means it's an overpayment. So overpayment is supposed to be created so that it will reduce the balance. So that it will reduce the balance. So any item unaweka on this side, it increases the balance. Any item unaweka huku, it reduces the balance. Let us see something else. We have a refund from customers. So any refund from customers. So refund from customers. So customer may to refund. Now, if customer may to refund, a refund from, what does the refund from customer means? So not from customers. Supposed to be to customers. To customers. So refund to customer. So refund to customer, it will increases our balance. It will increase our balance if it is to customers. So refund to customers. Then you have the bad debt. Bad debt. recovered. Hii itakuwa this side. Bad debt recovered. Dishonored check. The check ikakuwa dishonored. Dishonored check inamaanisha your debtor alituma check kwa bank. So alituma check kwa bank. So akituma check kwa bank is supposed to reduce the balance. So it's supposed to reduce the balance. But hiyo check ikabounce. So hiyo check ikabounce kumaanisha pesa haikuingia. So kumaanisha the dishonored check it will still increase our balance because hiyo check ili bounce. Kama hainge bounce, kama ingekuwa dishonored from debtors, we call them the receipts. So tunazitanga the receipts from debtors. You can also call it into bracket receipts, or we call them all receipts from debtors. So receipts, any receipts from the debtor is supposed to reduce the balance. So umelipwa. So when you've been paid, and any receipts reduce the amount. Also check received from the debtors. So check received. So you in person will receive from debtors. So this one also from debtors. From debtors also will reduce the amount. From debtors. So check received from debtors automatically will also reduce the balance. What else? Discount allowed. Talk about the discount allowed. So mlipewa discount. Then discount allowed is supposed to reduce the balance. Then allowance to customers. Any allowance to customers. Customers. Allowance to customers. And then we can talk about bad debt written off. Bad debt written off. So bad debt written off be on that side. Then the purchase ledger controller. Purchase ledger contract. So on this side. So we can have our balances. So if you have all those amounts, now we can have either, na nimeweka hapa hivi nimefinya sana. Let me put it juu kidogo. Purchase ledger. So this one is contra. Wanasemanga C. So we can have two balances. We can have the balance carried down. And then this one it will be what? The balance carried down. It will be the debit balance. The debit balance. You can also have another balance here. Balance brought down. Credit balance. On this side. I think it was sawa. That one is okay. Now, tukifanya swali, there's something I will show you concerning these two items. So, but for now, wacha ikae hivyo. For now, wacha hiyo ikae hivyo vile ilivyo. Now, let us do some notes. Let us give some notes on what we have been saying. Let us give some notes for the purpose of understanding well. The first note is that it is possible for us to have the balances brought forward in the sales ledger account as both debit and credit. That's the first note. It is possible to have the balance brought forward or the balance brought down as the debit or the credit balance. So that's the first note. So the first note you can say, it is possible to have the balance brought forward. You can also call it brought forward or brought down if you want. Brought forward Those who want to use brought forward is okay. So hii inamaanisha balance brought forward, or use the balance brought down if you want. So it is possible to have the balance brought forward in the sales ledger account as debit or credit. In the sales ledger control account as debit or credit. Now, why do you think we have to? So the debit balance is, so we say the debit balance is the normal balance from the previous period. Debit balance is normal balance. It's the normal balance from previous period. Let's say previous period, civil. But credit balance. Credit balance. What does it credit balance means? Now, a credit balance will arise when one or more debtors account have a credit balance. So credit balance arises where one or more debtors have credit balance. Have credit balance. So when a debtor has a credit balance, then that credit balance will be debited, will be credited in that account. So what does it mean? This means, so when you have a credit balance, this means number one, the company owns a refund. The company owes a refund since there is an overpayment. Since there is an overpayment. Now that is the reason why we might have two balances. So the company owes a refund. So this is most common. So remember, this is most common where the debtors has made an overpayment. The debtors has made an overpayment. Now let's talk about this item also. The purchase ledger contra. Purchase ledger contra. Purchase ledger contra. Purchase ledger contra. Now this one means it's a set off. So it means set off, or it is also called a set off. It is also called a set off. And what does a set off means? A set off means it must be offsetted. So this purchase ledger contra will be offsetted also in the payable control accounts. So it will have a two double entry. So one will be debited on the sales ledger, and then we shall have the debtors ledger contra for the same amount. It will be credited in the purchase ledger control account. So we call it a set off. It's also called a set off. So it occurs when the company or the company stock individuals trade with each other. Occurs. So we can say it occurs where the company or the individual or the individuals trade with each other. So occurs when the company or individual trade. So the company trade with the company itself. So company A trade with the company A. So company A inachukua vitu huku inapeleka huku, inachukua deni huku inapeleka huku, nayo huku inapeleka huku. So in that case, when you have what you call the purchase ledger contract, it means the transaction has been made within the company, and therefore it will be cancelled out. So this transaction will be cancelled out with another transaction in the same company, but for now it will be now for the purchase ledger control account. So this one will be transferred to the purchase ledger control account to set off the amount. So tunasema it occurs when the company or individual trade with each other. So it occurs when the company or individual trade with each other. So so the company trade with each other in what sense? Occurs where the company stroke or so the company or an individual trade with each other in terms of the company buys from its company, and sells to its company also, and sells to its company. For example, which institution? So any institution, for example, let's say company A. Now company A wananunua goods in company A. The same company A sells goods to company A. So that's what we call the contra. So the business is done within the company. So there is buying and selling within the company. So that's what we call the contra. So that one will be offset. So that one will be offset. Now we can also talk about the allowances. Allowances. Kuna mtu anasema refund to customers. Refund to customers. Unaje refund? Watu wangu, refund to customers. Somebody more may text up for refund to customers. What do you think about the refund to customers? Yes. That's a refund to customers in a reduce reduce this balance. Now refund to customers. Now remember this customer tunaongelea ni the people we owe. Now sisi ndio tunawapeleka pesa huko. So the pesa we are not receiving. Sisi ndio tuna refund the customers. So if you are refunding the customer ni kumaanisha pesa inatoka kwetu ikienda kwao. And therefore kama inatoka ni kumaanisha our balance ina increase. Our balances ina increase. Remember the customers need debtors, our debtors. Now they were supposed to pay us, but now we are the one who are paying them. So if we are the one who are refunding them some amount, ni kumaanisha that amount will increase our balance. But if it is the customers, our debtors, we are receiving the cash from the debtors. Now let's assume that we are receiving the cash from the debtors, so it is coming. It will reduce this balance. But because we are the one which we are refunding them, ni kumaanisha pesa inatoka kwetu. So kumaanisha the debit balance is supposed to increase. So if we are receiving, then that will be another case. Now let us see. Okay, let's talk about that refund. Now we talk about the refund to customers. What you need to know. When we talk about the refund to customers, it means that the customer or our debtor paid us in excess. So the customers paid us in excess. Now, but remember, if there is a refund to customer, it means that this customer who is our debtor paid us in excess. So his account has a credit balance, and therefore we need to refund this person. Now, remember, his account is in excess. Now, if you want to refund this customer, if we decide to refund this customer, it means if we refund this customer, the balance will reduce. Did you come and get? I don't know. I don't see. Because it's a refund. If we talk about a refund, it means that we are refunding someone who already has a credit balance. And when we talk about a person who has a credit balance, it means that that customer paid in excess. Now we owe that person. Now if we refund that person that amount, it means it will reduce our balance. I think that one is okay. Now let us talk about that refund because you may say, let us just talk about it. Refund to customer. So refund to customer, it means before even we move on, it means the customer has a credit balance. It means a customer has a credit balance. This customer has a credit balance, or you can just say overpayment. This person has paid us more than the amount we are supposed to receive. So tulikuwa na deni yao lakini ametulipa more. So this person has paid us more amount. Now we need to refund this customer this overpayment. Now if you want to refund this person that amount, it means it will reduce our balance. I think that one is well explained. So this happens when the customer has a credit balance on his account. So when we talk about refund, it is where the customer has a credit balance in his account. This could happen when the goods have been returned to use, or if there is an overpayment. So it can happen when you have two items. Number one, where we have an overpayment, or when the goods have been returned to us. Now, in that case, we need to refund that customer the amount. So either good akirudisha goods, we need to pay that person that amount of money. So when we pay that person that amount of money, it will reduce our balances. Or when we want to clear the overpayment from the debtors, we want to return the money of the debtors, which was overpayment, then that amount will also reduce our credit balance. Now, you also have cash sales. Now, cash sales are not included in sales ledger control account. So NB, cash sales are not included because cash sales does not affect the debtors. Cash sales is not included. Cash sales is not included. So cash sales is not included in the control account. Sales ledger control account. Sales ledger control account. So you need to know that one. So sales, ukienda tu sales, ujue hiyo ni kelele wanakuambia, you ignore. So only get sales and cash received from that. So what do we record now? We only record cash received and so we only record the cash received from the debtors or the check received from the debtors. But any form of cash sales, you don't record. So anything getting to data. So remember we say cash received from the data. And remember it is not cash received. So kama nasema to cash received or the cash sales, na hajatuambia kama ni debtors, then we shall not include it. But it must be from the debtors. But just cash sales kumaanisha waliuza without credit. So kumaanisha we shall not include it. So we say cash sales are not included in the sales ledger control account. Full stop. Then add this statement: only credit sales and cash received from the credit sales are included. So only credit sales and the cash received from the credit sales are included. So that's what we need to do to know. So only credit sales and the cash received from credit sales are included. Provisions also are not included. Ukiona provisions for doubtful debt. Provisions for doubtful debt are not included. Provisions for doubtful debt are not included. Provision for doubtful debts. So ukiona any provision for doubtful debt, they are not included. Provision for doubtful debt are not included. So ukiona provision for doubtful debt, you ignore. Provision for doubtful debt are not included in the sales ledger control account. Provincial for bad debts. So provision for that bad debts are not included in the sales ledger control account. And then another item ya mwisho, only cash discount are allowed. Only cash discounts are allowed and not are included. So let's say are included in the sales ledger control account. In the sales ledger control account, and not trade discount. And not trade discount allowed. And not trade discount allowed. And not trade discount allowed. So okay, about trade discount. So trade discount trade discount Only cash discount are included in the sales ledger control account and not trade discount allowed. So that is okay. So this discount allowed is supposed to be the cash discount. Supposed to be the or the discount cash discount. Cash discount. I think that is all you need to know when you talk about the sales ledger control account. So that's all that you need to know when you talk about the sales ledger control account. So remember, purposely, this is an account that is similar to the debtors control account, and it is there to record all the transaction relating to the debtors, and all the transaction which affects debtors account. I think that one is okay. So Kiambu Komkiani, you explain what sales ledger control account. So you just say that sales ledger control account is an account which is similar to debtors individual account, and it records all the transaction relating to the debtors account and all the transaction which affects the debtors account. So remember, cash sales does not affect the debtors account cash sales, and also provincials for doubtful debt. Also provincial for doubtful debt do not affect the sales ledger control account. That one is okay. Any question before we go to purchase ledger control account? Any question before we go to purchases ledger control account?
About,
I have a question.
what about returns?
Ati?
What about returns inward?
Recovered,
Return?
that covered and bad debt written
Sikuski,
off.
ongea na
What's the
nguvu. I
difference?
don't know why sikuski. At what about what?
Difference between bad debt recovered and bad debt written off.
Bad debt written off ni kumaanisha muri's write off. You don't expect it to come to the business. So haiko. So kumaanisha kama haikuji ni kumaanisha your balance ita reduce kwa sababu you don't expect that amount. So bad debt written off, you are not expecting that amount. Sivyo? So you are not expecting that amount. So you shall credit that amount in your sales ledger. So credit inamaanisha ina reduce the balance kwa sababu you shall not receive that amount. So the bad debt written off, you shall not receive that amount. Ume write off. So it will reduce the balance. So kama ulikuwa na balance ya 20,000, so ulikuwa na balance ya debtors ya 20,000, and then 5,000 ukazi write off, nikumaanisha you shall not receive that amount. So your debt then it may reduce by 5,000. So 20,000 minus 5 inabaki 15. But when you recover bad debt recovered, the bad debt recovered, what will happen to bad debt recovered? Bad debt recovered inamaanisha you are supposed to do what? Ulikuwa unafaa ku receive some amount. You are supposed to, ulikuwa ume write off some amount. Ulikuwa ushazi write off already. So bad debt recovered kumaanisha ulikuwa ume write off but you are not expecting to receive. But sasa you are sure you shall receive that amount. So if you are sure you shall receive that amount, what will happen? So what will happen for bad debt recovered? What will happen? So ndio usisumbuke sana mambo mingi. Just know that bad debt recovered, mambo na kufikiria sana, the bad debt recovered will be always debited in the sales ledger control account. That's what you need to know. Mbona kuna mtu ametype something hapo? I don't know what is but I prefer you. So hii purchase ledger contra tumesema ni business to business. Na niwaambia niliweka sasa nikawaambia I will explain it more when we shall be doing a question. But remember tukifanya swali ndio mtaiona venye inakuja vizuri. So for now just know it occurs where the company associated with the company itself. So the company buys goods for itself and also the company sells the goods to itself. So inajinunulia goods na pia inajiuzia. So in that case, when you have such kind of a transaction in a business, then that side transaction can only be offset. And how do you offset it? One through the purchase ledger control account, and the other one it is through the sales ledger control account. That one we shall do it ukifanya swali. For now, just know that one. Ikiwa tu hivyo. So let's talk about the purchase ledger control account. the purchase ledger. I think let me explain in my capacity so that you don't hang. So tukifanya swali, I think we shall see how these items zinakuja. Wakati kwa tunafanya swali, I think that one will be better. Kwa sababu through a question, but hizi maswali zinakuanga rahisi, zinanga mambo. Maybe penye inaweza kuwa na issue, it is for the, unajua sometimes pia tunakuanga na nini, we call them we have the correction of errors. So this question also have the correction of errors and the reconciliation. So hapo ndio maybe sasa mambo inaenda kisungumkuti. But once you understand the idea, I think itakuwa sawa. So before we go to that part, wacha kwanza tumalize hizi ma theory. Sawa. So let us talk about the purchase ledger control account. So it's also called the creditors control account. So this account is also called the creditors control account. So the account is also called the creditors. So the account is also called the creditors control account. So this account is also called the creditors control account. So this account, you can say this account is similar to individuals creditors account, or you can call them the payables account. Payables accounts, only that it include details, only that it include details, only that it include details only that it include details and transaction entered by all the creditors and transactions entered by all creditors. So it relates to all the transaction which relates to the creditors by all creditors. And then format, you can draw our format, purchase ledger control account, purchases ledger, purchases ledger control account. So it can also, so we can have the credit balance. And you can also have so just give me a moment, I'm coming back. Nipe tu dakika mbili kidogo tu. I help someone with something here. Just a moment. Okay. So tulikuwa tunasema nini? What are we saying? That when we talk about the purchase control account, we can have both balances. So your balance inakaje, itakuwa inakaa hivyo. So you have the nimetoa hapo carry down, supposed to be brought down or brought forward. You can just call it brought forward. So one is the credit balance, one is the debit balance. Now, how does it comes in? Why do we are supposed to have this balance, but why are we having this debit balance? So remember our balance from the previous period, itakuja on this side. So the balance brought down, our credit balance is the balance for the previous period. Now the question is, why are we having this other balance on the debit balance? Now remember, these are our purchases. Now what if we pay the supplier? We overpay the supplier. So remember the other one, we were overpaid. So remember for the sales ledger control account, for sales ledger control account, the debtors were to reap more. So we were paid in excess, or we were overpaid. So in that situation, we had a credit balance on the credit side. Now, in this case, it will be the opposite. Now, we are the one who are paying. So since tunalipa the suppliers. Remember the suppliers, they form the part of purchases, our suppliers. So we purchase goods from them. So it forms the purchases. We buy goods from our suppliers. So the purchases. Now, what if we pay excess? Now, what if we pay excess? Now, we expect that they will pay us that excess amount. Now, if they decide to pay us that excess amount, then it will reduce. It will going to reduce. So in this side, you're supposed to. So in this side, to take us this side, you could reduce. Any amount in the equal side, you could reduce the balance. Any amount in the equal side, it increases the balance. So any amount in the equal side, it increases the balance. So any amount in the equal side, it increases the balance. Any amount in the equal side, it reduces the balance. It reduces in equal side, it reduce the balance. Any amount in the equal side, it increase the balance. Now, if we overpaid, ni kumaanisha tulipa more. Now, this amount tunakuja kuiweka hapa because if we were to be refunded this amount, then it will reduce this balance. So tuko na deni yao. So sisi tuko na deni ya hiyo suppliers. So tuko na deni yao ya 20,000 for example. And then sisi tukawalipa an excess. So hapa tukaje tukawalipa an excess of 25,000. 2,500. Now kumaanisha ama tukawalipa yes excess of 2,500. So this excess of 500 is supposed to reduce the balance. That's what we mean. So it's an overpayment to us. But I think that one tutaangalia tu baadaye. Let us see the item now. Now the other item that we can find here. So we can have check paid to suppliers. So remember now atuongea mambo na customers. So kumbuke hapa sasa si customers. Si customers, sasa tunaongea mambo na suppliers. So check from the supplier paid to suppliers. So tukipa suppliers, so kumbuka tuko na deni ya suppliers ya amount. Tukiwalipa some amount, it reduce the balance. So when we pay the suppliers, hiyo balance yetu tuko nao yao it reduce. So when we pay them. Aya. Then you can also say cash paid to suppliers. Cash paid to suppliers. So the keyword is what suppliers, or you can say creditors, or you can call them creditors if you want. Cash discount received. The other one was cash discount allowed. So remember, cash discount allowed, it will affect the sales account. So remember, the cash discount allowed will affect the sales control account. Now utai debit. Now for this one, uta credit in the purchase ledger for discount received, but for allowed, itakuwa kwa the other account, the sales ledger. Then what else? Allowance to suppliers. suppliers. I think hiyo ni hizo tu, hakuna nyingine. Allowance to suppliers and maybe return outwards. And maybe return outward. I think return outwards itakuwa hivyo. So the other one ilikuwa return inwards. Return inwards itakuwa on the other side. So return inwards itakuwa kwa enda muweke huko. So I think alikuwa tumeweka. So when you have a return inwards, we shall credit. So return inwards itakuwa on the credit side of the purchase of the sales ledger. So return inwards itakuwa kwa sales ledger on the credit side, but return outwards itakuwa on the debit side of the purchase ledger control account. I think iko sawa. So return inwards enda uongeza huko juu. So return inwards enda uongeza huko juu kwa sales ledger control account huko juu na weke on the other side. Inaitwaje? On the credit side, on the credit side. I think that one is okay. And then what other items can we put? So credit purchases. So on this side we shall have the credit purchases. So sisi tumepurchase on credit. So if you purchase on credit, deni yetu inaendelea kuongezeka. So when you buy on credit, deni yetu inaendelea kuongezeka. So sisi tunaendelea kuongeza deni. So ukinunua on credit, ni kumaanisha your credit purchases inaenda ikiongezeka. So your balance inaenda ikuwa mingi. But ukilipa inapungua. But once you pay, and then you have a refund from suppliers. Refund from suppliers. The refund from suppliers is the opposite of the other one, so itakuwa on the other side. And then sasa we had the sales ledger contra, itakuwa hapa sasa. Ilikuwa naambia mweke sales ledger contra. Sales ledger contra. So just a moment. So let us move on. Sorry for that. So tunasema aje, tuko wapi? So we can have the refund from suppliers. Then if I was saying we can have, so this is what I was talking about. Now, when you have the business to business, so when we talk about the sales ledger contra, this is a set of, so business to business. So on our purchases, we shall have the ledgers control account, Apple. But on our sales, in our sales ledger control account, now we shall have the purchase, but the amount will be the same. We shall have the purchases. So in our sales ledger control account, we shall have on the credit side the purchases ledger contra of the same amount. Kama hapa ni 5,000, huku itakuwa 5,000, but it must be a contra. It must be a contra. The other one is okay. So kumbuka hivyo. So on purchases we have the sales ledger control account on the credit side, but on the sales ledger control account we have the purchase ledger contra on the debit side. But kwa hii account the sales ledger control account is on credit. On the other account is the purchases contra on the debit side. Then we can have the balance figure. So we can have both balance on this side. So balance carry down, debit balance. And you can also have balance carry down, which is a credit balance. Na hii pia nilikuwa nimewambia mweke star. I will show you. But that's how generally that account should look like. So let us give the notes. Let's see if we can have some notes. Now the first note inasema, it is possible to have debit and credit balance brought forward. So note number 1, it is possible to have balance brought forward. So in this account, for debit and credit side. So it is possible to have the debit and the credit balance in both sides. Reason why? This is because we could have overpaid our supplier. So this occurs where we have overpaid. This occurs where we have overpaid our suppliers. So this one occurs where we have overpaid our suppliers. So that is the most case. So this occurs when we have overpaid our suppliers. Or it can also occur. It can also occur where we return goods. We return goods we have already paid for. We have already paid for. So ulikuwa umenunua goods na ukalipa. Now, but in that situation, ukarudisha hizo goods. So in that situation, we can also have an over, or we can have both balances. Now that is okay. Now, check paid to the creditors or the this one. The credit purchases will be affected to this account, but remember the cash purchases will not be affected. So cash purchases will not be affected. So credit purchases will be affected in this account, but cash purchases will not be affected. So you need to know that one. Cash purchases will not be affected. Refund to suppliers. Now refund to suppliers. Now, refund is not true. Refund from suppliers. What does it mean? Now, refund from suppliers, this happens in case we have paid the suppliers we have overpaid. So this occurs, so different suppliers occurs where we have overpaid our suppliers, or we have returned goods that we have already paid. Now, in that situation, if we return goods that we have already paid, now it is supposed to reduce our balance. It's supposed to increase our balance, sorry. It's supposed to. So if tunaweka side hii, it's supposed to increase our balance. Tukiweka side hii, it's supposed to reduce. So iko side ile. So it's supposed to increase our balance. Allowance by suppliers, so allowance to suppliers, it is on the credit side. This one represents reduction in price. So allowance to suppliers reflects reduction in the price in excess of the cash discount received, in excess of the cash discount received. So that one will reduce our suppliers. I think iko sawa. I think there is nothing else to consider. We can do a question from our past paper. Let us do our question and then we analyze together. Tuone kama this question are possible to be done. So let's open our past paper. And we start with December 2024. December 2024, there was no question. Last sitting, those who did the sitting paper, there was no question concerning that one. August 2024. August 2024, there was also no question. There was no question concerning that one. August 2024. Aya. Tukienda April 2024. April 2024. April 2024. There was no question, April 2024. So in December 2023, I think it was in December 2023. December 2023. December 2023. Akukuwa actually. August 2023. August 2023. Yes. August 2023, question number 1B. 2B. August 2023, 2B. So do this question. August 2023, question number 2B. August 2023, question number 2B. Who will read for us? In your Juhudi. So it is Juhudi. 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 Nana tusomea. So ukifanya swali, you open the both account. So ukifungua swali, una open the both account at the same time. So you open the both account at the same time. You open both account at the same time. So nada tusomea swali. Yes. Programu anasomea hiyo swali. Let me pick point.
The following balances were extracted from the books of Juhudi traders from the month of July 2023. Debit balances on 1st July 2023, sales ledgers were 1,428,000. 1st July 2023 purchases ledgers were 10,500. On credit balances, 1st July 2023 sales ledgers were 40,500. 1st July 2023 purchases ledgers were 553. 146,800. Discounts received were 142,500. Discounts allowed were 2009 or 209,700. And then discount purchases, including cash purchases of 152,000, they were 1,334,000. Cash sales, it was 618,000. Credit sales, it was 2,068,200. Credit notes issued to customers, it was 75,000. Contra settlements, they were 36,900. Payments to trade payables, it was 1,159,200. Interest charged by trade payables on overdue account, it was 69,000. Receipt from trade receivables, it was 1,578,000. Bad debts written off, it was 7,200. Customers dishonored checks, it was 26,100. Interest charged on customers overdue accounts, it was 96,100. Debt collection expenses charged to trade receivables, it was 10,800. Credit notes received from trade payables, it was 26,700. Balances as at 31st July 2023, it was 14,400, and then it was 50,700. Required statement of profit and loss for the year ended. Where?
No, not statement. Required sales ledger. So required, you're supposed to complete the sales ledger control account for the month ended at 1st July 2023. And number 2, required purchase ledger control account for the month ended at 1st July 2023. Because how are you? Or which paper are you using? Trade and profit account.
Okay, maybe somebody else can help me. Nimepotea kiasi.
Ni sawa, but let us now move on. Asante, thank you. Let us do it together. So as I said, you need to open those accounts at the same time. So you need to open those accounts at the same time. So mimi nitafungua zote at the same time. So we have anaitwa nani huyo jamaa? Anaitwa Juhudi Traders. Let us call it Juhudi Traders. Juhudi Traders. Sales ledger control account. Sales ledger control account. For the month ended. For the month ended that 1st July 2023. That 1st July 2023. We also need to do the other one. Juhudi Traders purchases ledger control account. Purchases ledger control account for the month ended 31st July 2023. Hata nikiweka ikuwe nono kidogo. So I think iko sawa. That one is okay. So tunaanza pale juu. Tunaanza na pale juu. We started with the information iko pale hapo juu kabisa. So the first information anatuambia, we have the balances at the beginning. So we have both debit. We have the for sales ledger. So we have balance brought down, brought forward. This one is the debit balance. Debit balance ni ngapi? Debit balance. Debit balance, mimi naona 14,28,000. Mimi naona 14,28,000. We also need the balance brought down, which now is the credit balance. Now, what's our credit balance for sales ledger? We naona 40,500. So if this amount is in thousand, mimi naona 40,500. Ndio tumezana hivyo. So iko kuja kwa ingine, we have balance brought down. This one is the debit balance. Debit balance. So what's our debit balance for purchases account? So for purchases account, the debit balance is 10,500. 10,500. I think that one is the correct amount. 10,500. Then we have balance brought down or brought forward, which is our credit balance. Credit balance. So what's our credit balance? So kwa sababu nimeona our credit balance ya ngapi? Purchases ni 40,500 or what? 4,500 tumeweka pale, not 4,500. Ni 553,800. 553. That is number one. So tumemaliza na balances. So tunaenda the first one. Discount received. Now, discount received will affect which account? Now, remember discount received will affect our purchases. Discount received will affect our purchases. So kumbuke discount received will always affect our purchases. And how will it affect our purchases? Discount received, it will reduce this balance. Remember, it will reduce this balance. So discount received will reduce the credit balance. So tunasema hapa discount received. So discount received will affect this balance. Discount allowed will affect discount allowed will reduce the sales balance, credit balance. Discount received will reduce the credit balance for purchases. Discount allowed will reduce the debit balance for sales. So that one is okay. So ni ngapi? Discount received namtobia ni ngapi? Kwa swali 142,500. 142,500. Kutoka kwa discount received. Discount allowed kama kawaida tumesema itakuwa the other side now. Ita reduce, so discount allowed ita reduce the credit balance. So remember, this is the original balance from the previous period. And remember, this is the balance from the previous period. But this one is where we have either overpayment. Napa is where we have received more than what we expect. Napa we have paid more than what we expect. So this is the balance that we know from the previous period. Na he. So that's what we are talking about. So that's what this is what we shall be affected. This balance and this balance. Sawa sawa. So discount allowed tumesema ni ngapi? 209,700. 209,700. 209,700. Kutoka hapo tuenda kwa purchases. Now what did you say about purchases? Now we only record what? For purchases we only record the credit purchases. We only record the credit purchases. Now we only record the credit purchases. So remember, credit purchases ina increase deni yetu. So remember tuko na deni ya 553,800 from our suppliers. Then tunachukua another deni. So tumechukua deni nyingine ya credit purchases. Now but hii credit purchases wametuambia already ilikuwa ni 1,334. Ilikuwa ni 1,334,000. So hiyo ilikuwa yote including the cash purchase. So lazima tutoe hiyo cash purchases. Tutoe 152,000. So lazima tutoe hiyo 152,000. So we move it there. 152,000. tukitoa itakuwa ngapi? Toa hiyo haraka haraka. Toa hiyo cash purchases. Tulisema cash purchases haifai kuwa, will not affect this one. 334. So 1334 minus 152. 1182. So tulisema cash purchases will not be affected in that account. So that one is 1182,000. So tumemaliza kwa cash purchases, tunaenda kwa cash sales. Cash sales we ignore. Cash sales una ignore hiyo, hata hiyo ni kelele. Hiyo wanatupigia kelele. But credit sales affect the debtors account. So credit sales will affect the debtors account. Now credit sales will be on this side. So credit sales will be on that side. Reason why? It increase deni yetu. So tuko na deni ya 1428. Then tunaongeza deni now. Tuongeze deni nyingine. Credit sales. Tunaongeza deni, so itaongeza 2068,200. 2068,200. Nike tuko sawa. Aya. Credit note issued to customer. Now, credit note issued to customer inamaanisha return inwards. So that is just another name of return inwards. Credit note issued to customers is another name of return inwards. So, return inwards inaendanga wapi? Return inwards. Return inwards itakuwa on this side, sivyo? Kwa tumesema return inwards, muongeze to be on this side. So this is the credit note issued to customers, which means wanasema ni 75,000. Is that all correct? 75,000. Then you have the contra settlement. Contra settlement. Now, hiyo ndio nilikuwa naambia mweke star. Contra settlement. Tulisema aje kuhusu contra settlement? What did we say about the contra settlement? Contra settlement. So contra settlement ilikuwa pesa ngapi kwanza? So we have, where is it? Okay, put aside that one, tunarudi kwa hiyo contra settlement kidogo. Let us go to payment to trade payables. Payments to trade payables ilikuwa ngapi? Payments to trade payables ya 1159. Ya 1159. So hiyo ina affect, so ukifunga payables ni ina affect the purchases payables. Now ni payments. So kama ni payments, so if it's a payment, it's supposed to reduce this balance. So if it's a payment, it's supposed to reduce this balance. So itakuwa on this side. So tukilipa, once we pay, tukichukua credit ina increase the balance, but tukilipa ina reduce this balance. So payments to suppliers. Payments to suppliers or creditors. Let me just call them the creditors. Payments to creditors ilikuwa ngapi? 1159,200. 1159,200. 1159,200. Now interest charge by the trade payables on overdue account. Interest charge on overdue interest on payable account. Now what does that mean? Interest charge on overdue account. Now this is what it means. Now interest charge on an overdue account or interest charge on overdue account on payables. Now remember our payables, our balance ndio hii. This is our balance from the payable ndio hii hapa. Now what if hujalipa in time? So mko umeagree utalipa in time but haukulipa in time, so wakakucharge interest. Now wakikucharge interest kumaanisha unaongeza madeni. Now where should we put that amount? Should we put it on the debit side or on the credit side? If ulikuwa na balance 553,800 lakini umedelay kulipa in time, so payment umedelay payments, and therefore the suppliers wakakucharge an interest on that amount. So kwa hiyo deni ulikuwa nayo wakakuongezea another interest, so deni yako imeincrease ama imereduce? Yes, nataka niambie deni yako imeincrease ama imereduce?
Excuse me, sir.
Yes.
Excuse me, sir.
Yes.
Mi niko na swali na hapo kwa payment to payables, to trade payables. Si trade payables
Ehe.
inakuanga debtors.
Ni trade payables, trade payables si debtors. Trade payables ni creditors. Ni wenyewe wewe umechukua deni kwao, unangoja kuwalipa. Ulinunua credit, ulinunua goods on, ulinunua goods kutoka kwao, ulipurchase, but hukuwalipa. So we call them the creditors or the payables.
Oh, okay.
Sasa ukiwalipa ina reduce the credit balance ya payables. Tuko sawa?
Yes.
Aya, so nilikuwa naambia hii ingine of interest overdue on the payables account. Now, remember kuna deni yao ya 553,800. So kuna deni yao ya 553,800. So hiyo ndio deni tunafaa kulipa the suppliers or the wenye wametupatia goods on credit or the purchases on credit. Now, tulikuwa tunafaa kuwalipa on time lakini hatukuweza kuwalipa on time. So what they did, waka add interest on that amount. So pesa ilikuwa tunafaa kuwalipa, kama tunafaa kuwalipa some amount, waka add an interest. Now that interest, we need going to add the balances or might reduce our balance. Yes, Geoffrey. Yes, it increase our balance. So what do we do? If it increase our balances, tunaweka on this side. So interest due, it increase our balance. So interest on overdue account. So ilikuwa ngapi? Ilikuwa ya 69. So it increase the balance. So ukumbuka kuna increase, any amount unaweka kuna increase, any amount unaweka huku ni reduce. So any amount unaweka side ina reduce. Any amount unaweka side ina increase. Same things to this. Any amount unaweka side ama side gani, side ina increase. Side any amount unaweka side ina reduce. Unafaa kujua hivyo. Anyway, ni sawa, let's continue. Receipts from trade receivables. Now, receivables remember ni data. So we have some receipts. Now, tume receive some amount from the data. Now, kama tume receive some amount kumaanisha deni yetu tulikuwa tuna own 1428 from the data. Lakini wametutumia some amount. So hapa kuna receipts from the data ya 1578. So receipts is supposed to echo ID so that ifanye nini? It reduce this balance. So unasema receipts from data from the trade receivables. So unaweka ID so that kwa sababu tuna receive that amount from the data. So kama tulikuwa na data, since tulikuwa tuna own these people 1428, so we expect them to pay this amount. So tunangoja watulipe hii pesa, lakini wametulipa. Wametulipa ngapi? So receipts from the wametulipa 1578. So kama wametulipa 1578 ni kumaanisha ita reduce our balance. So ita reduce this balance with that amount. Aya, tuendelee. We have another one here, bad debt written off. What did you say about bad debt written off? So bad debt written off iko ID pia. You see itakuwa ID. Bad debt written off, I've got to explain. Ni how much? 32,700. 37,200. 37,200. Customer additional check. So additional check itakuwa ID. So customer alituma check. It reduce this balance. So alikuwa ametuma check. So kama customer huyo data ametuma check na ikakubali kuingia kwa account yetu, tungeweka ID so that it reduce this balance. Lakini ilikuja ikabounce. So kama ina bounce, ikikuja ikabounce, so we shall not put it this side, itakuwa this the other side kwa sababu haita reduce the amount, so ita increase the amount. So dishonored check. So dishonored check it will be on this side kwa sababu, lakini kama it was check received tungeweka side, lakini kama it bounce then it will be on the other side kwa sababu we never received that amount. So dishonored check ngapi? 26,100. That is the dishonored check. Aya, next, interest charge to customers. Interest charge. Now, remember this one was charged to payables. Remember this one was charged to payables. No, but we have another interest now, charged to customers. Charged to the customer. Now, the customer, sasa ndio tunamcharge. Remember hii interest on overdue account on the payables ni suppliers wanatucharge sisi. So sisi ndio tunachajiwa. Now, in this case, when we have the interest charge to the customers, sasa ni sisi sasa tuna charge the customer. So customer alikuwa anafaa kutulipa on time lakini hajatulipa. So sisi tunamwambia hujalipa on time, we are going to charge you interest on that amount. Now the question is, deni ya customer ni 14,28,000. Alafu hajatulipa ya pesa in time. So we charge that person an interest. So tunamwongezea an interest on this amount. Now, deni yake ina increase ama ina reduce? Deni yake itakuwa ina increase ama itakuwa ina reduce ya huyo customer? So alikuwa sawa kulipa, ina increase. So what do we do? What do we do? So tunaweka side interest on customer. So do increase this amount. Interest charged on customers. I think hiyo tunaelewana. Ilikuwa ngapi? 96,100. 96,100. I think iko sawa. We have another one. Debt collection expense charged to the trade receivables. Now, the word is charged to the trade receivables. Now, kulikuwa na bad debt. Kulikuwa na bad debt. Yes, some amount. Now, we want to create that bad debt. But the cost of collecting that debt itakuwa charged to the receivables. Now, kumbuka hawa watu wetu wako na deni yetu ya 1428. Alafu tunawaambia, because tuna collect the bad debt from you people, we are going to charge you an extra amount as a cost of collecting that debt. Now, tunaongezea deni. Si ni kweli? So, what will happen to that amount? Deni yao ita increase ama ita reduce? Because tunasema we are charging them in cost on the debt collection. So, hiyo cost tumetumia ku collect hiyo deni kutoka kwao. Hiyo cost tumetumia, we shall charge them, tuta increase kwa account yao. So kama alikuwa deni ya 1428, tutaongezea another cost yenye sisi tumeincur ya ku correct hiyo deni. So that cost ita increase deni yao ama ita reduce?
Ita increase.
Yes, so tunaweka wapi? Tunaweka on this side. So cost, collection cost, charges on data. So kama wangesema the word data, hiyo cost ingekuwa in affect any part, but because walisema it affects the debtors, walisema it affects the trade receivables, we need to put it 10,800. 10,800. Do we have any other amount? Yes, we have another amount. Credit not received from the trade payables. Credit not received from trade payables, that one is return outwards. Bila hata kuambia that one is a return outwards, na inakuanga hapa. Return outwards. Hiyo niliwaambia. So credit note. So credit note from what? So credit note received from the trade payables. Okay, so the credit note received from the trade payables, we join the return outwards, 26,700. 26. Return iko wapi? Outwards, 26,700. That one is okay. 26,700. And then you have the balances now. Now you can complete the balances. Now, hapa nilikuwa naambia mweke star. I told you to put a star hapo kwa balance. So hapo ndio kuna mambo. Now, before the balance, we had some another item. Tulikuwa tumewacha pale. Ilikuwa nini hiyo? There's something tulisema. Ilikuwa nini hiyo? There's something niwaambia muache.
Contra settlement.
Ilikuwa?
Contra settlement.
So contra settlement. So contra settlement ilikuwa how much?
$36,900.
Now, tukirudi kwa ile swali yetu. If you go back to our not our swali, to our account. We had two contra settlement. One ilikuwa kwa debit side, the other one was on the credit side. Which one was on the debit side? Which one was on the debit side? Nilikuwa pia mweke star. Which one was on the debit side? Was it purchase ledger contra or the so tukienda kwa sales ledger control account, tulikuwa na contra entry. So which one was on the credit side? Is it the purchase ledger contra or the sales ledger contra? Ukienda kwa sales ledger control account on the credit side. Yes?
Purchase.
So unakuja unasema hapa, so contra settlement inakuanga tu mara mbili. one is on the debit side, the other one is on the credit side. Unafaa kujua hivyo. Now, tukienda kwa sales, iko on the debit ni the purchase. The purchase ledger contra. How much? Meniambia amount ni ngapi?
14,400.
6,900. Now the same account will be written off. That's why we are talking about the set off. We need to set off this amount because it's the business to business, company to company, the company A to company A. They are doing business, so the company itself is doing business to itself. So company is doing business to itself. So if we have this contract, then itakuwa offset on the other side also. Ledger, sales ledger, contra. So we write it off. 36,900. And then sasa nilikuwa nataka sana niwape the last item. Now the last item nilikuwa pia nimwambia mweke star. The balances. So we have two balances. So we have the balance brought down. You also have here balance carried down, sorry. You also have here balance carried down. Same huku. Balance carried down. You also have balance carried down on this side. So one of them is a debit side. The other one is a credit. Now tukienda kwa now this is what you need to know now. This is what you need to know from this information. So tuko na vitu ngapi tunafaa kujaza? 1, 2, 3, 4. We have 3 items we need to jaza. Now tuteremka pale chini. Tuende pale chini kwa balance as at that 1st July 2023. Purchase ledger wakatuambia debit 14,400. Can you see it? The balance at the end of July. Can you see the balances? The balances at that 1st July 2023. Purchases debt 14,400. Can you see it?
Yeah.
Yes? Nataka mjibu bwana. Unajua siwasikii mzuri.
Yes.
Now, sawa. Amesema yes, but kwa sauti ndogo sana. Now, this is what you do. And you hear me very clearly. Hear me very, very clearly. Now, look at the first one. Purchases ledger debit. Now, purchases ledger debit ni ngapi? 14,400. Now, purchases ledger debit ni 14,400. And it is written debit. It is written debit. Na ukikuja kurekodi hapa, unakuja unaweka kama credit. So unakuja unaandika hapa, it is credit. Sorry, tuko kwa purchases. Tuko kwa purchases hapa. Credit. This one is the credit balance. Now, the purchases pale umeandikiwa, the purchase ledger kwambia debit. Na ukikuja kurekodi hapa, the debit balance, ukikuja kurekodi hapa, unakuja unaweka kama credit balance. Unakuja unaweka ni ngapi? 14,400. I think tuko sawa. Then nenda kwa sales. Sasa tunaandikia sales, we have sales credit. Now sales wametuambia credit. So unakuja uweke hapa kama debit. Utakuja uweke hapa kama debit. You need to know that one. So unakuja uweke hapa kama debit. Ya ngapi? So hapo ni credit, utakuja uweke kama debit ya 5,700. So that this balance ikienda mbele hapa ikuja hapa next time itakuwa the balance brought down but credit. Itakuwa the balance brought down but credit. That's what tunafanya hivyo. So ukiona hapo so, the last balance unakuja unaweka the opposite. Ukiambia the purchase debit unakuja unaweka hapa kama credit. Unaweka on the credit side. Ukipatiwa sales ledger credit unakuja unaweka hapa kama debit. Tuko sawa? So ukipatiwa for example the purchase ledger ni debit 14,800. So the purchase ledger ametuambia ni debit 14,800 kumaanisha ni debit. But ukikuja kurekodi hapa unakuja unaweka kama credit 14,400. Aya. Kwa debtors ametuambia kwa sales control account wametuambia we have 5700 but wametuambia ni credit. Wametuambia ni credit. Inafaa kuwa on credit side. But ukija kuirecord unakuja unaweka kama debit. I think hiyo tuko sawa. So now you can balance the account. So balance the account to get this amount and this amount. So you balance the amount. So to balance, so itakuwa 553. So balance, I think mimi nimefika mwisho. I think you can balance now the account. So kwa kubalance hapo sioni kama nitaweza kubalance. So I think you can balance that one. Si tuko sawa hadi hapo. Can we call it an end at that point? You balance the account.
Yes, yes.
So you balance the account, you get the balance down, the balance carried down for the sales account, and also you get the balance carried down for the ledgers, for the purchase ledger. So this is where we shall start. So hatujamaliza this account, control accounts. So we shall come and do correction of error. So this is where we shall start. Correction of errors in control account. In control account. So correction of errors in control account and reconciliation. Write down that one as a subtopic where we shall start. Correction of error in control account and reconciliation. And reconciliation assignment. 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 December 2022, question number 1A. Assignment. December 2022, question number 1A. That's number 1. December 2022, question number 1A. Then we have August 2021 1C. August 2021, question number 1C. Question number 1C. Alafu tunazamalizia na gani? November 2019 5C. November 2019, question number 5C. November 2019, question number 5C. And then you have May 2018 2B. Hiyo achana nayo. We have another one, September 2015 5B. September 2015 5B. September 2015 5B. Those are the only question which appears. So those are the only question which appears. So that one marks the end of sales ledger and purchase ledger. So we shall start from the correction of errors in the control account plus reconciliation statement plus reconciliation statement. So plus reconciliation statement. I think that one is okay for now. I want to wish you a favorable, a good weekend and a fruitful one. I want to wish you a good weekend, which is a fruitful one. So we shall meet on Monday, God willing. So keep on doing what we are doing in class. I think all these items are repeatable. So what we have done is what we shall find in the exam. There will be no change. So any question up to that point before we end the class? Elisha, do you have a question?
No.
Ledisha amenyamaza sana siku hizi. Do you have a question?
No.
Regan pia umenyamaza sana bwana. Leo ndio umeingia class, ulipotea. Any question?
Quite some time. No.
Sawa sawa. So we meet
No
on
question.
Monday. Good evening. We shall continue. I will also share the video for those maybe who walikuwa na issue na network, and for those who did not manage to join the class today. But all in all, I wish you the best weekend. So we meet on Monday.